Thanks for clicking. The Canadian Real Estate Association, the CREA, has released Canada's national real estate data for the month of May, showing the beginning of a possible rebound, at least according to the CREA. According to the CREA, the increase in sales from April to May shows that the market might be showing signs of a rebound, that the slam dunk market that it once predicted may have been delayed, but is now starting to materialize.
So I do think that some of that rebound that we were expecting may have just been moved from the first half of the year into the second.
And it's not just the data that the CREA is presenting as evidence of that takeoff. It also has a secret weapon.
So we have a little bit of a secret weapon in that we can see daily data all the way through May and into June.
With that said, we will do our due diligence, demonstrate a modicum of journalistic integrity, and check if A, an increase in sales from April to May is noteworthy, and B, we'll check out how well the CREA's secret data has worked out in the past.
Aren't you not supposed to ask that question?
But even with the CREA's secret real estate data, it's not clear that the market is about to take off. As current geopolitical uncertainties demonstrate, lower interest rates might not be coming to Canada's real estate market anytime soon. So what I want to do today is go over Canada's real estate data for the month of May, take a look at the CREA's contention that we might be seeing a real estate takeoff, go over the CREA's secret weapon, and then discuss some upward pressures being put on Canadian fixed mortgage rates. We do have a big week next week with StatsCan set to release Canada's inflation data for the month of May, and we'll obviously have an update out on that data on this channel. Make sure you click like and subscribe if you want to get those updates, but for now, let's get into this data. Onto the data. First up, the benchmark price. The benchmark price, that's the price of a home that represents the most popular set of features, which was down, though marginally, in May. Canada's benchmark in April was $692,000, and that dropped about $1,500 to $690,900 in May. So the benchmark price down about $1,500 since last month, but down almost $25,000 since this point in time last year, back when the Bank of Canada had just cut rates and the market was ready to go.
It may have only been 25 basis points, but the psychological effect for many who've been sitting on the sidelines of this market will no doubt be huge.
Speaking of Canada's real estate market getting ready to move, the big number, according to the CREA, the increase in sales, which came in 3.6% higher from April to May.
That has never happened before.
And that 3.6% increase month over month in the number of sales in Canada led Cathcart to the contention that Canada's real estate market could be taking off, noting that there is a sense that maybe the expected turnaround in housing activity this year was just delayed for a few months by the initial tariff chaos and uncertainty. So, is a 3.6% increase in sales activity from April to May enough to signal a market takeoff? It's difficult to answer that question as the CREA does not provide us with the historical data, only giving us April and May's data and then providing us with quarterly annualized data for all of the months prior. With that said, we do have Toronto's real estate data to demonstrate what a spring market should look like, and if we look at that data, we find that 8 of the past 12 Mays saw an increase in sales, with an average of 7.66%. And sales increase in May because it's the spring market. Sales are supposed to increase as that's when the buyers and the sellers are out. But don't take my word for it, take it from the CREA's famed economist.
Well, remember last month when we had discussed the standout data point being a big jump in new listings in September? You only really get those in April, May, and June for the spring market, and you get it again in September to kick off the fall market.
So, sales climbing by 3.6% in May, as reported by the CREA, and fawned over by the industry puppets in the media, not really a signal of anything. Not really anything about which to celebrate.
This is huge!
Now, I would love to analyze the historical month-over-month data, but as mentioned, the CREA does not provide it. Hey, media, maybe you could ask the CREA for that data, do some due diligence, maybe as like an extra credit, or bare minimum, journalism project.
First of all, you're throwing too many big words at me.
Regardless, sales aren't anything that spectacular for the month of May, but fear not, according to Sean Cathcart and the CREA's secret weapon, things are looking up in June.
We have a little bit of a secret weapon in that we can see daily data all the way through May and into June. And it does look like it's still running at those same levels that it was in the second half of May. So I do expect at least one more month. And actually, since
The May sales, higher sales numbers really only got kicked off in the second half. If June is a whole month of that, it might even move higher again.
Yeah, that daily tracking. Here's that daily tracking as reported in November.
Our daily tracking shows that listings are now starting to wind down for the year, as they always do when you get into November. But sales are still churning away at relatively higher levels so far.
Toronto then had the third worst November that they had seen for the past 12 years. And then we have the daily data for when the market was heating up pre-rate cuts last spring.
I mean, we have monthly data that we release that this is all about, but we can also see the weekly and daily frequency to that data. And it's looking like the market is really gearing up.
Prices continue to drop to this day after that heat up, now sitting about $25,000 lower than they were during that daily data. So you know that daily tracking, that secret weapon, that secret data. If you're not going to provide the data, given that this is the real estate industry, we're all aware of the track record, you may have just as well made it up.
Challenge accepted.
So the benchmark price down, though marginally, sales up between April and May, though they're very much supposed to be, as that is the spring market. But that's the past. Let's talk about the future. Are interest rates looking like they will be conducive to that returning slam dunk market that the CREA had promised us?
Call it a lock, call it a sure thing, call it a slam dunk.
Well, recent geopolitical uncertainties tell us that maybe not so much. With the events unfolding in the Middle East, usually we would expect investors to be piling into Treasury bonds right now and interest rates dropping. Usually, anytime there's a major crisis throughout the world, we see investors pile into U.S. Treasuries. And since a bond's price and its yield are inverted, that means we end up seeing lower yields and therefore lower mortgage rates. We saw that at the beginning of the Israeli-Hamas war in October 2023, when yields fell 18 basis points or 0.18% within a matter of a few days. We saw it when the U.S. struck Iranian General Soleimani, I probably butchered that, back at the beginning of 2020 when Treasury yields fell, potentially bringing down interest rates. We saw it with the rush into bonds on SVB as investors sought the safety after the banking failures. You get the idea. When we have a crisis, investors rush into the safety of U.S. Treasury bonds, sending their prices up, their yields down. Then we get lower fixed mortgage rates.
It would be like this forever.
Except this time, when we're not seeing it, with investors increasingly choosing gold rather than U.S. Treasuries as their safe haven asset. With the Grandmaster himself, since Liberation Day at least, increasingly pushing investors away, combined with the Federal Reserve holding pat, concerns over the level of U.S. debt, and the inflationary consequences of the big beautiful bill, U.S. Treasuries aren't seen as safe as they once were. And we're seeing this play out in real time right now, with Treasury yields actually up since the events of last week. And unfortunately, as we've talked about so much before on this channel, when the yields on U.S. Treasuries go up, that means the U.S. government pays more to borrow money, which means that the Canadian government pays more to borrow money. The yields on Canadian government bonds are up as well, which means you and I pay more to borrow money as well.
I want you to stop it! Mom!
Now, obviously, I'm not saying that Canada's real estate market won't take off because we can no longer take advantage of international crises with lower mortgage rates sending prices upward. What I am saying is that the stickiness that we're seeing in U.S. Treasury yields only reinforces the idea that we've been talking about so much before on this channel, that investor concerns over U.S. structural deficits and the inflationary pressure stemming therefrom means that investors will continue to demand a higher premium, a higher interest rate, a higher yield when lending the United States money. And if the United States is going to pay more to borrow, then so too are you and I. As such, without some intervention from, say, the Federal Reserve, from the Bank of Canada to print money again, which is not out of the realm of possibility, but all things being equal, without that kind of intervention, then we could very well be seeing higher fixed mortgage rates here in Canada than most of us have been accustomed to for the past decade and a half. So, sales up 3.6%, not that unusual for Canada's real estate market. Compared with the Toronto data, it's actually fairly low for Canada's real estate market. The CREA says this could just very well be the beginning, especially using their secret weapon, their secret data that none of us can see. And events currently unfolding in the Middle East redemonstrating the upward pressure on mortgage rates that Canada could be seeing. How all of this plays out remains to be seen, but we will obviously continue to track Canada's real estate market on this channel. Make sure you click like and subscribe if you want to get those updates, but for now, thanks so much for watching.